Hi, everybody. Welcome to the Talk with Kiet podcast, where we connect people, ideas, and capital to help make a difference in the world. Today, I am so lucky to have Joe Madden on with me. Joe is the founder and chairman of Xpansiv and the CEO of FIUTUR. Joe and I today will talk about his extensive career and entrepreneur journey, as well as entrepreneurship opportunities in the sustainable finance and climate space. Joe, welcome to the podcast.
Great to be here. Thank you, Kit. Very excited.
No, amazing to have you. And Joe, where we typically start with our talk is the origin story. From my understanding, you started in the transportation and logistics space. So tell us a bit about how do you went from doing that to really helping fight climate change.
Well, it's a fairly twisted, nonlinear journey, but I ended up I actually was basically a freight broker in the mid '90s, but it was about the time that the internet was making its way into supply chain, and the group that I was working with had a pretty advanced business model and some advanced technology at the time. And so I was around in the sort of design and implementation of third-party logistics systems. So I don't have any technology background at all, but I was around in the sort of days where the decisions that you were making became how things grew up. And so I saw kind of the move from entirely analog to digital in real time over the course of, say, 3 or 4 years. And then strangely, I had a client that was the second largest paper company in the world, or thereabouts, at the time, and it was a really interesting logistics problem. But effectively, what we were doing is we were taking temperate, old growth rainforest in British Columbia and getting the trees to a mill, getting the from the mill onto rolls of paper onto a train to Southern California, and then turning that paper into news inserts and catalogs, like mailers, that ended up in the trash in about 3 weeks. So we're basically going from virgin temperate rainforest to the trash in 3 weeks. And I basically started seeing the impacts of what global supply chains look like, and thought that there's maybe something else you could do. So I ended up doing a MBA at Presidio Graduate School, which was a startup at the time. I think now it's one of the leading sustainable MBAs around, but it was very startup at the time. But it was really a global hub for a lot of folks in and around policy and things like that. And I got involved with some early climate actions, actually designed some of the first calculations for supply chains on greenhouse gas quantification, things like that. And then we ended up with a thesis that came out of Presidio Graduate School that was it was a reverse supply chain for refrigerants. So refrigerants are very high global warming potential gases, and basically we created a reverse supply chain to aggregate refrigerants and then get them to destruction. And one of my co-founders, Jeff Cohen, who is a Nobel honoree with IPCC, had built out a methodology to quantify those reductions, and we built a bunch of partnerships. And so we ended up getting that methodology recognized in the California Cap and Trade system. So when we did that, we got an education, or I got an education on how commodities work. For example, Cargill has a commodity university. So I got to be part of some of the things. I had no idea how markets worked at all. But all of those things were happening at the same time. So we got an incredible amount of access to information. And then at the same time, the European carbon markets had sort of collapsed. They had a price collapse in the underlying units, and the US sort of had missed its federal climate bill target. So everyone was focused on California at the time. And a lot of the relationships or the network that I have today came from that period of probably 18 months where all kinds of folks from the finance markets, they were all here and around California. John Melby, who's the CEO at Xpansiv now, met him at that time. Henrik Hasselnut met Henrik, who's the COO at Xpansiv, and just an unbelievable number of people. So we were super fortunate. And then from there, it was clear that there were gaps in some of the markets, and we kind of made the leap that their resource constraints were going to make their way into global markets. So the underlying thesis was, if you have a diminishing climate budget, you're going to start to price things in like the carbon intensity of a barrel. And that actually, that was an article in Rolling Stone, actually. It was called Global Warming's Terrifying New Math. And that's how I read that. And I sent my board at the time a note that said, this changes everything. I don't think they knew what I was talking about at all. But it was actually, the article was based on some research that Mark Campanale had done. So he's now a friend and an advisor, but at the time it was groundbreaking because it was basically third grade math, equating the overshoot in global markets, where reserves or fossil reserves were being valued as if they would all be monetized. But there was a scientific limit where you had a 5x overshoot on those calculations. So the thesis was that markets would somehow figure a way to reconcile that. So then we went on a whole journey of how do you use data and distributed ledger and things like that to actually record data and start to map that type of expression. But we were way ahead of the market. And so I'll call that Xpansiv 1.0. We wrote a paper, published in Paris, and then we kind of built Xpansiv 1.0 off that. And then from there, we realized that there was no market infrastructure whatsoever. And those same relationships from California Cap and Trade, John had joined our board at Xpansiv 1.0, and we knew the guys at CBL Markets. And so we basically said, let's build market infrastructure. So we put those two companies together and then raised quite a bit of money and did, I think, 6 or 7 transactions to really build out what we thought that was a necessary market infrastructure. And then that led to FIUTUR, where we had for a long time worked to try and scale up data and things like that, and how you could actually connect into finance. But as we grew as a market at Xpansiv, you have limits to what you can do as a market. And so we had capabilities that markets don't normally have, and capabilities that we felt strongly that would address some of the systemic challenges in the space. And so we made the recommendation, John and I, to the Xpansiv board about this time last year, that in order to unlock some of the potential of these markets, it'd be best to take technology and apply it that we actually had developed and apply it externally to connect systems and allow for basically a integrated flow of capital all the way through capital formation, markets, and reporting, and then standardize the way that data flows into that system. So that resulted in FIUTUR. So that was a long way of that was the sort of winding journey, I guess.
No, it's an amazing journey. But I do think one thing I want to zoom in a bit, because I don't think people understand the challenge of bringing different market infrastructure together. Like, look, IHS Market, a company I came from for 17 years, right? We end up buying 100 companies in a 10-year time frame. There's a lot of work involved. So talk to the audience a bit about, how do you bring the team's technology, the capabilities, like in terms of aggregating those infrastructure into one umbrella?
Uh, it's a massive challenge, and I think that challenge goes on. And John and Henrik are now managing it at Xpansiv. But when we look at that, I think one of the key things is finding the I would call them the links to interoperability between those systems. And I think that's what one of the key things we're working on at FIUTUR is how you actually link those together to make things much more seamless. So I think Xpansiv's done a very good job, and CBL in its very early days had figured out that the key to enabling those markets would be integrating sort of physical type market, spot market, with the underlying registries, and then using that to build derivatives. So they and we worked with regulatory bodies and the derivative exchanges and things like that to design a system that was consistent with the way the world had currently understood things. And I think, not to get too far into it, but I think when we think about this space, all the way from finance to trading and things like that, at the core, everything that we've done in commodities today is based on a physical understanding of the world. So all of the constructs somewhere in the stack assume a physical outcome. So when you start to move into things like renewable energy, which is an attribute, or carbon offsets or carbon insets or biodiversity credits or any of those things, they're mapping to a regulatory and financial structure that was built on a physical understanding, but they're actually digital constructs. So it's a nuanced, doesn't sound that big, but when you get into that to map those things, you can't necessarily just jump to tokens easily. Now, long term, all of these technologies that are coming into play, if applied properly, I think rapidly accelerate things. But it's nuanced, and it's needs to map to the current understanding in a way that allows it to scale up. So you're I don't even want to say compliant, because the regulators aren't necessarily even involved, but it needs to be congruent.
And we touched on this briefly earlier, though. Talk about regulation and compliance. Like, I think the OCC came out today, or was it yesterday, on banks at $100 billion or more now need to do regulatory compliance with climate risk, physical risk, etc. Like, is regulation helping in your view?
Yeah, I think it's, when I say helping, I think it's certainly a driver, right? So by having those, it's forcing systems to come into place to meet the regulation. So I think the overarching regulations that are being put in place, without being too prescriptive, are incredibly helpful, because they really provide the underlying momentum or driver to create systems that meet the outcomes. So I think we're in a place now where you have, we were laughing at an offsite last week where we were saying, if you had all of our phones hooked up to a stream for news updates, and you had the little bell on, like, it would just be going bing, 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 because it's happening so fast. But there is a lot of overlap in the regs. So I think you are going to start to see real systems come into play. I think when I mentioned prior that, at Xpansiv 1.0, we had talked about the proliferation of data and all of these things. I think one of the things that we missed at the time was the need for really sophisticated platforms to do certain things, right? And that's changed dramatically. So you have, I'll use an example. You have a group like NAMU 21 that's effectively digitizing finance, right? That didn't exist before, but it certainly allows you to deliver information into constructs easier, financial documents, credit agreements, things like that. You didn't have sophisticated platforms like for GHG reporting, like a Persephone or a Watershed or those types of platforms. And you didn't have integrated environmental markets, something that looks like an integrated system with Xpansiv and registries and markets and things like that. So as those systems come into play, I think the linkage between those systems allows you to quickly create new models that do meet the regulations. But it requires that integration across systems and a level of standardization that needs to be implemented, I guess, from my perspective.
Yeah, no, I totally agree. And because when you think about, like, even as a regular consumer, right? Like, on my everyday consumption, like, how I know what my impact is if a lot of that upstream data doesn't get passed down to me. Like, when I'm buying food and there's like ingredients X, Y, and Z in there, like, why can you have climate impact X, Y, and Z?
Yeah, and I think you're starting to see, I would say, the players come into the space that are very, very good at doing some of those things. So they're starting to pick apart supply chains and do subsets of supply chains and enable almost like compartmentalize pieces of supply chains, so you can kind of get standardized outcomes within a supply chain that's not trying to measure the whole supply chain at once. It's measuring a component, and you can then deliver that information and start to aggregate it in ways. I think it's also a challenge where it's not greenfield per se, where I think a lot of the tech players that come into the space run into regulatory, if they're used to being Silicon Valley and it was all greenfield and there was no Google AdWords, like, you could just build something. Here, there's constraints and things like that you need to understand those things before you build. And also there's, I think, a tendency towards my platform first, and my platform is going to do everything, when in reality, specializing within the platforms and building out very specific products and value propositions allows for a broader system to emerge.
No, and that's a great point, right? Even in capital market, it's thinking in terms of ecosystem and where you play within that ecosystem as a whole, right?
Yes, and I think there's a blending of that with some of the advanced tech that's coming in, where there really needs to be an understanding of where and a focus of where that fits, as opposed to trying to be everything to everyone.
No, that's right. And so on to, I guess the main topic for today is really about entrepreneurship in sustainable finance and in the climate world. One thing that you and Xpansiv team did, you guys raised a massive amount of money last year, and you'll continue to build on that vision. In your view, are there still more capital opportunities for entrepreneurs in the space?
Absolutely. I think it's they're literally, I think the figure we use at FIUTUR is somewhere between 100 and 200 trillion need to come into the space in the energy transition. So, and I'll say, it was kind of, as an entrepreneur, I had 16 trillion to 100 trillion, and I got corrected by one of the MDs at a bank saying, we think 16 trillion's low. We would start with a floor of 100 trillion, and we would cap that at 200 trillion. That's never happened before in my life, right?
Yeah.
Showed a market, and they said, you're a little low. So I think it's almost limitless at this moment with the right thinking and the right technologies. So there's, for entrepreneurs building infrastructure or applications for infrastructure, massive market. I think folks that are building out the reporting, and you can see the capital raised by groups like Persephone and things like that, or some of the new mechanisms to integrate with markets that allow for the flow of this information to come into markets. Again, I think incredible opportunity. And then also some of the infrastructure that connects these new technologies, right? So if you look at some of the things like carbon capture and things like that, if you capture carbon, where does it go, right? That becomes a pipeline company. Or how do you build out hubs? So there's all kinds of things. Or how do you repurpose existing hubs that are used for other purposes today? So all of those things come into play, I think. And then I would say that in the carbon space, you're starting to see what I'll call the new E&P players, if you will, which look, and that's the wrong term. But in the old days, you had, early days of crude, you had folks that had the best geologists in the world. You had folks that had the best equipment for drilling and extracting and things like that. And those became massive companies, right? The BPs and Standard Oil and so forth. Today, if you look at platforms like Cultivo, they're using digital tools to assess degraded land, and which has great potential for, say, carbon sequestration if curated in the right way. I don't know if curated is the right way. Cultivated. I guess they're calling Cultivo. So, but so if you look at what they're doing, though, they're basically using instead of geology, they're using other ways to map really valuable assets and then build out all of the components that you would need to enable those assets to generate value. And there's multiple platforms, I think, that are starting down that road. DevStream is similar, where they're using technology and building out the infrastructure up front to enable that type of approach. And so I'm using those as examples, but that space it's almost unlimited what needs to be done. So yes, I think there's a lot of capital that's very interested in the space and looking for the right way to basically follow the old models, what worked in the past, and you're just applying them in a new way.
And in your view, for someone that's actually not in the space, like what are some of the things they can do to transition into the space?
So I think the best thing that's happened from my perspective in the whole space is you're getting folks that really understand different aspects, whether it's folks in science and quantification or folks that have been working in operations or folks that have been working in markets, and then lifting that experience and applying it, because there's not one aspect of this transition that doesn't have components of prior models. So you can't make that experience up. You have to have that experience to come into this if we're going to be able to deliver the outcomes in the time frame that's required. You can't learn all of this at once. So that's, I think, one of the most encouraging things that I've seen is you have people that are very established in other industries and then saying, "Oh, I've been in derivatives for last 15 years. I was working in bioscience, and now I'm working in applying the bioscience in the forestry sector." Like, that's literally all of those things map here. So there's no shortage of that. But I also think people need to recognize how early this is today. And, if you have skills and talent, this is an amazing place to sort of deploy that or apply that.
So essentially leveraging people's expertise and capabilities to expand the tooling for the space, right?
Exactly. So
Practically.
even the financial innovation that needs to happen, um, there's a fellow we just met last week. He's developed very advanced approaches, taking all his capital markets experience and bringing that forward, and just applying it to this space. And all of a sudden, that he's speaking in the language of, private credit and institutional banks. They understand what he's talking about, whereas all the folks that I would say maybe are traditional, they didn't have that experience, so they couldn't actually get to that product. So I think you're starting to see that type of, I don't know, crossover. And then all of a sudden you get very rapid advancement because you're making applying a deep pool of knowledge in a new way. But it's just a tweak off what was been done before.
Yeah. And I guess my next question is a bit loaded because everyone's aiming for net zero by 2050. Like what is your view of likelihood of hitting that goal, or what needs to change for us to get there if the likelihood is not high?
So when I think about, well, first off, net zero, needs to get definitively agreed upon what net zero means. But I think when I look at this, there's almost no times in human history where people saw the change coming until it actually happened. And you kind of look at that over and over and over. And I saw a graphic this last week, and I don't know what publication it was in, but it was showing the IEA's projections on crude year by year since I think 2015. So overall crude demand. And if you look at what they had one projection in 2015, was lower in 2016, lower in 20, like each year got lower, lower, lower. So you're starting to see all of these things shift. And what I see is some of the things we're doing at FIUTUR is you're connecting these very sophisticated systems, and all of a sudden that has you can have a kind of a catalytic effect, or something flips. And so I always think back to I don't know, that there's a picture of, I think it's Fifth Avenue in New York, where it's like 1908 or something, and it's all horses, and there's like one car. And then it's like 1913 or something like that. It's all cars and one horse. And I'm ballparking, I don't know if those are the exact, but that's a very short period of time for those things to happen. And that's, to even talk to my kids about, there used to be a landline, and you used to have to talk to your friend on the phone, and go in the closet or whatever. That's not even in their consciousness. And that's not that, I mean, I'm old, but it's not that long ago. So I think some of the things that happen, we're on the verge of a potential sea change. But we had an offsite with our team last week, and we actually said, this is probably the most unstructured time, definitely in my life, where you have climate happening, you have AI happening, and then you have geopolitical changes that are very, very significant, and they're all happening in tandem. So, but that's where I think systems really shift when you have those kinds of unstable moments.
Yeah, no, you raise a great point. And in a way, you mentioned AI. That's what happened to us overnight with AI, right? All of a sudden, ChatGPT from November to now, like everyone's now talking about it out of nowhere.
Yeah, exactly. And I mean, it's like every other thing, it gets a hype cycle and things like that, but there's an awful lot of real potential that's going to be unlocked there. And so I see the combination of those things and the integration of some of these more sophisticated platforms, you can have rapid, I think, change. So I don't think I can predict whether we get to net zero once we define it properly. But I think there's absolutely potential for outcomes that we had not anticipated or didn't think were possible. And I go back to that IEA example, because they're the experts. And every year they basically said, we were wrong, we were wrong, we were wrong. And I don't mean they're doing a bad job. I just mean that what they saw that year, the next year looked different, and the next year looked different. And if you can continue down that, things change really quickly.
Yeah. No, that's awesome. And Joe, thank you for being on today. Really appreciate it. That was so insightful. How we usually end the talk is really passing the mic back to you in terms of, what are the people you want to connect with from this podcast, and how can people help you?
Well, I really appreciate that. So first off, thanks for being here. And I think the folks that we would love to get to know at FIUTUR are really the folks that are building out the systems in and around reporting. We're really an enabler. And so reporting platforms, investors that are looking to deploy capital in new ways, and then also all of the data providers that have data that can be valuable in sort of the I'll call it the new economy. So very excited to be here. Thank you for allowing me to be here. And yeah, this is great.
Yeah, thank you, Joe, for being on. This is fantastic. And thank you to the audience for your support as always. Till we speak again. Thank you, everybody. Thank you, Joe.
Thanks, Kiet.
Bye-bye.